Hey there, fellow traders. Welcome back to Insider Financial. In this video, we will discuss the stocks on our radar. First, to get our market-moving reports on top small caps, click that link in the description or go to insiderfinancial.com and sign up with your email. After you sign up with your email, you can then sign up with your mobile number. Text is the fastest way to get all of our reports, and it works for all numbers worldwide. In the welcome email, you can also download our free ebook, The Insider Financial Guide to Penny Stocks. Our ebook, our text messaging service, and our email service are all free services from Insider Financial. We don't run any Telegram groups, Discords, or paid subscription services whatsoever. Well, guys, first, an update from our last video. LUNR, Intuitive Machines, was up 27% last week on the back of a good earnings report. I said $10 was resistance, and now it is support. We got a nice bounce on Friday off that $10 number. Revenue of $58.48 million was up 359% year over year, and that beat estimates by $7.59 million. The company also issued its 2024 outlook. It said it's narrowing its full year 2024 revenue outlook to $215 to $235 million and are trending towards the midpoint. Fiscal year 24 revenue consensus is $222.92 million. The company has a current cash balance of $106.9 million. As of the month-end October, company said that coupled with its strong visibility in the timing of collections for contracted milestone payments, that it has confidence that the company will end the year with a similar cash balance. The company expects backlog expansion driven by key potential upcoming awards such as Near Space Network, Direct to Earth, LTVS Phase 2, among others, coupled with task orders for OMES and Near Space Network 2.2 LUNR Relay. 31% of the float is short. This has been a retail-driven rally that has been just squeezing the shorts. Over 31% of the float is short, as I said. My only concern with LUNR is just all this insider buying. All selling, no buys. So just be cautious. Just a lot of dumping by the insiders, so be careful there. Regarding the overall market, key U.S. equity averages stumbled Friday, with Wall Street reassessing what's next for the Fed's rate cutting cycle. Cemented a weekly loss following a massive stock rally fueled by Donald Trump's re-election as president. Technology stocks led Friday's loss as traders increased the odds of the Fed holding off on interest rates next month and in January. The moves come after Fed Chair Jay Powell made hawkish remarks at an event in Dallas on Thursday. Odds remained in favor of a quarter-point cut in December. The S&P 500 slipped 2.08% for the week to close at 5870, posting losses in 3 out of 5 sessions. The benchmark index posted its worst weekly performance since the start of September, and has now notched a negative week in 3 out of the last 4. It was still a historic week for the gauge, which on Monday closed above 6,000 points for the first time ever. As expected, the headline Consumer Price Index for October, which is the CPI, held steady at plus 0.2% month over month for a fourth straight month. Meanwhile, core CPI held steady at plus 0.3% month over month for a third straight month as expected. Then October's headline PPI came in at plus 0.2% month over month, which was in line with estimates. Core PPI was up 0.3% in line as well. However, on a year-over-year basis, the core measures of both consumer and producer inflation came in at above 3%. Traders initially viewed the CPI report favorably as the inline reading strengthened bets that the Fed would deliver another quarter-point rate cut at its Monetary Policy Committee meeting in December. However, the PPI data on Thursday dented those odds, and they took another significant hit after some comments by Fed Chair Jerome Powell on Friday. Monday, 10 a.m., Chicago Fed President Austin Goolsbee will give welcome remarks before the Financial Markets Group Fall Conference hosted by the Federal Reserve Bank of Chicago. On Tuesday, notable companies due to report include Walmart, Lowe's, LOW, XPeng, XPEV, which is a Chinese EV maker, and Workhorse, WKHS. It's coming off the lows here, bouncing off the 50-day moving average of 82.75, closed at $1.25. Could see a major move next week on in WKHS on the back of earnings. Then also on Tuesday, the 3-day Microsoft Ignite conference will begin. The tech giant is expected to highlight its latest AI innovations. Last year, companies ranging from Oracle, ASAN to Monday.com were seen benefiting from the updates at the Ignite conference. Wednesday, 8 a.m., Target will hold its earnings call. Options trading implies a move of 9% after the report is released. Of note, Evercore ISI issued a warning that the retailer will issue conservative holiday quarter guidance. 5 p.m., we get NVIDIA's earnings call. Options trading implies a 9% share price swing for the semiconductor stock after the report is released. So Wednesday after the close is NVIDIA Day, and that report will set the tone for the rest of the week for the overall market, as NVIDIA now is the world's most valuable company, overtaking Apple. On Thursday, BIDU, BIDU, PDD Holdings, PDD, both out of China, and GAP, GAP, will report earnings. 10 a.m., the existing home sales report will be released by the National Association of Retailers, and then we get Philly Fed manufacturing data. Friday, Global Flash November PMI reports will provide a health check on global growth, and then 10 a.m., Michigan consumer sentiment. A couple of small caps to keep an eye on include NRDY Inc., NRDY, heavy insider buying. I mean, look at all this insider buying. We just got last week a almost $7.5 million buy. This is the founder and CEO. So he's just been accumulating stock right at these levels here. Over 11% of the float is short. So again, insider buying, I mean, this guy has insight to the company. He's putting his money where his mouth is. So I think NRDY is a name to put on your radar screen and do your research. Next up, guys, is Bloom Energy was up 59% on Friday after it signed a supply agreement with American Electric Power for up to 1 gigawatt of its solid oxide fuel cells, which it said is the largest ever commercial procurement of fuel cells in the world. As part of the agreement, AEP has placed an order for 100 megawatts of fuel cells with further expansion. Orders expected in 2025. Financial terms were not disclosed. Bloom said that the initial installation of its fuel cells will help data centers and other large energy users who need to power their operations quickly. At the same time, the grid is built out to accommodate demand. AEP expects its commercial load to grow an average of 20% per year over the next 3 years, driven by data center development. The company said the projects will initially rely on natural gas, but the technology has the potential to use hydrogen as an alternative fuel. Evercore ISI analyst James West said the deal is a big win for Bloom, as it validates Bloom's fuel cell offering and provides incremental momentum to fuel cell adoption as a solution, while the grid infrastructure build-out continues to be burdened with overregulation and permitting issues. Finally, guys, is ZONE. This is a low floater that I covered in our last video. As you can see, it bounced off the key trendline support at $1.80, closed at $2.11, and we're trading higher, $2.19 in the after hours. The float is just 2.19 million shares. Lots of chatter on StockTwits. I mean, since I started this video, we've had 36 new posts on ZONE. So this is one definitely to get on your radar screen. We could see some big fireworks. Look at the top discussion on how will Zone perform on Monday's session. Gap up above 3, flat, no big moves, sell off below 4, or strong breakout over 4, 528 votes. So you're getting a lot of chatter tonight on StockTwits about ZONE, and we've had some big success covering these types of plays for our subscribers and our followers on this channel. Lastly, guys, as I do each and every trading day, I will be scanning the pre-market. If I see anything else, I will let subscribers know. That's why signing up is so important. And again, it's completely free, guys. At Insider Financial, we put stocks on your radar with potential outsized moves. As I repeatedly stated, there are always opportunities in the markets daily. The important thing is identifying which stocks to invest in to grab that money. The key is trading green, not red. We're looking for those momentum plays with catalysts. It's all about finding momentum before it happens and riding that wave. That's what we're doing here at Insider Financial. And to get our small cap reports, we cover low floats, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks, and insider buying. Click that link in the description or go to insiderfinancial.com and sign up with your email and mobile number. There is no spam and your info is never shared. You can even sign up, just see the level of research we do here at Insider Financial and unsubscribe. Remember, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. It is our opinion, meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for joining us today on Insider Financial. Hit that subscribe button and ring the notification bell to never miss the latest insights and strategies. Until next time, happy trading. Bye-bye.